Welcome to the Sazmining podcast. At Sazmining, we are bringing you into conversations with today's industry leaders in blockchain and cryptocurrency. Our goal with this podcast is to improve the understanding and adoption of blockchain and cryptocurrency by giving you an insider's look at what's being built and informed predictions on what the future holds.
William Samasegi is the CEO and founder of Sazmining Inc. All opinions expressed by William or his guests on this podcast are solely their opinions and do not reflect the opinions of Sazmining. You should not treat any opinion expressed by William as a specific recommendation to make a particular investment or follow a particular strategy, but only as an expression of his opinion. This podcast is for informational purposes only.
Today's episode is sponsored by BlockFi and Cogent Law Group. Our listeners can visit blockfi.com/Sazmining for an exclusive offer for cryptocurrency management, and check out Cogent Law Group for all your legal needs. And my guest today started his first company when he was only 20 years old. He is the previous co-founder and chief operating officer of Empire Business Translations. A few years ago, he jumped into blockchain, and today he is the founder and CEO of Easy Blockchain, a Chicago-based blockchain infrastructure company that designs, builds, manages everything along the life cycle for physical infrastructure for proof-of-work blockchains. Easy Blockchain uses digital asset mining and high-density computing as a physical tool to solve global waste energy such as flare gas, stranded energy, electrical load imbalance, and more. So without further ado, I'd like to introduce you all to Sergii. Thank you for being on the podcast with us today.
Thank you for having me.
Yeah, definitely. So my initial question after going through that whole background is, what led you to create Easy Blockchain?
You know what? That happened actually by really a coincidence. Me and my partner at that time, who we founded this company together, actually, we were doing some import and export business, and we had an opportunity to sell computer hardware, and there was a huge demand on GPUs. So we actually wanted to take a look deeper in what's going on in this market, and that's how I figured out that there is a huge mining industry going on in the beginning of 2017 and 2016. So we wanted actually to try this out, and that's when I actually learned more about what the future of blockchain going to be and future of finance going to be, and I could see how technology can actually be implemented technically in any industry. But mining was very hot at that time, and we want to try it out. I always wanted to be in the industry with just starting off, because usually I was late in every industry in my previous businesses. And I wanted something new, something which has a lot of risk, but has a lot of potential in the future. So that's basically how we got to Easy Blockchain, where we are.
Yeah. Well, going in those early stages of growing a company, you're a multiple time founder. Growing a company is one of the hardest things to do. So in those early stages of Easy Blockchain, how did you break into the industry and start seeing that initial traction?
Yeah, well, look, I could say the same words everyone says. It's because of the hard work, and it's actually true. It's because of hard work. We had to work very hard at that time. Everything was new and quick. So I think the big and main step that I took with my partner at that time was actually hiring the right people, the first employees. And that helped us a lot, because when it's just me and him and we're just doing everything, that would not lead to anywhere. So we had to hire a couple of people, and those people actually helped a lot. They technically took off a chunk of our founding work. We had to partner doing some favors. They do us favors, when you don't have much money to spend. So you have to do barter business a little bit. So you just tell them, just provide us this service, we'll pay you back at some time, or you can put your mining equipment into our colocation services, we'll give you a discount, things like that. Yeah. So working hard and finding the ways out, being out of your comfort zone was actually most important part of that time.
Yeah, and so diving into Easy Blockchain, the core of your business is you're working with these different proof of work systems. So just diving into the concept of proof of work, can you explain what exactly that is and how it relates to your business?
Yeah, proof of work, that's, well, traditional, it's a consensus algorithm on some of the blockchains such as Bitcoin and Ethereum. And what's different about this algorithm is that it requires actual physical equipment to do some type of computational work in order to confirm the transaction. The currency, that's actually the proof of work when a computer does some type of work.
Yeah. And what you're doing with Easy Blockchain, how are you utilizing proof of work?
So our whole business is very much looking into Bitcoin blockchain. That's what our whole focus is. Bitcoin blockchain requires a lot of mining infrastructure to be done, and meaning that you have to build mobile data centers, you have to install equipment, you have to provide power in order to keep those equipment actually doing that proof of work. So people, they believe that cryptocurrency mining is something, out of thin air, but actually requires a lot of infrastructure behind it. So in order to make those machines, those computers run, we need to build the physical infrastructure behind it. So that's what we do actually. We build the physical infrastructure, we build mining farms, we build mobile mining farms, we install miners, we service miners, we do everything that has to be done with miners.
Yeah, definitely. And so just to summarize, your company's in the business of building the physical infrastructure,
Yeah.
setting up, whether it be a data center or a custom type of shipping container design, where you put the computational resources inside and start processing data for proof of work systems like Bitcoin or Ethereum.
That is correct, yes. And we do mine Bitcoin for our own proprietary mining, that we do that too.
Yeah. So diving into your actual mining operations, are you doing uh, like traditional air-based systems, or are you doing air-based in shipping containers, or how do you guys go about building that infrastructure?
Right. So in 2017, when we just started, we did use the shipping containers, but we found those structures not very versatile in hot climates. We had the HVAC system out there, but during the hot days in summer, the containers, they get very hot because of the direct sun. It's not only because of the hot air inside. So that led us to actually building mobile data center from scratch using some different type of material, that steel. So we started using the sandwich panel. The sandwich panel, that's like two thin layers of aluminum with a foam inside of it. So that helped us actually to reduce the heat of the box itself because of the sun. And we do use the HVAC system, heavy-duty HVAC system that sucks out the air. We have great engineers that actually calculate how much air has to be taken out of the box. So we use a lot of Schneider Electric equipment, and we work with their calculation system. So it helps us actually to understand how much air has to be out. Because this question is being asked every time when we talk to a customer who has no experience in cryptocurrency mining. They get to us is like, oh, how is it cold? Will be enough air, air circulation there? Will there be air conditioning? So things like that. And because of our material, our mobile data center, we call it Smartbox, is actually a totally different product on the market. We do have some lower end model, like Easy Tank, we call it. That's a container. It's like on the cheaper side, but if you will building a larger infrastructure in some warmer climates, and now it's everywhere. Here in Illinois, it's also very warm during the summer. You'd better go with our Smartbox. Smartbox is much better in the hot airs, as well as actually in cold, because it's the material which we use in it is actually used to build the refrigeration rooms. So that's where the air doesn't come out and doesn't come in. So it's like very stable temperature inside.
Yeah. Well, there's definitely a lot of different considerations that you have to take into account when building these different types of systems. It
Yeah.
seems like you guys have your own type of design that you are going out and you're providing to the market. So when you're going and doing that whole process of trying to find new customers or try and find people to purchase or utilize your services, how does that conversation normally go? Because it really does get into a lot of very technical and certain concepts that people outside the industry might not necessarily be familiar with.
Yes. Look, we from the time we started, as I said, 2017, we have developed multiple questionnaires, like FAQ questions, that we send to our customers or potential customers to actually answer them, so we can understand what their needs are. And usually the questions are the same on their end, like what's how is it good in the hot environment, how many miners you could fit in, how many kilowatts you could fit in. And we have all those answers usually before we actually start any work. But usually our box is built to order. So the customer comes over, he or she asks what they really need, what's the scale of the project, what's the timeline of the project, and we start building out. We do have an engineering team that works for us full time, that designs everything literally from scratch. So if you come over and say, I need a smart box or any other type of a unit for this type of a budget, and I don't want to use copper in my box, I would use aluminum because it's cheaper, and I'm happy to take that risk, we'll do it for you. So our boxes are not really on like off-shelf product. It's actually built to order. We do have some specific design that we play with, but we can always like change something. But usually most of the customers are happy, and we have some concerns in the process of selling the product only when the customers are not experienced and they believe that they can mine Bitcoin for very small investment, and they, when you tell them that the box costs $100,000, like, okay, I'm probably gonna just take this time.
Yeah. So are you seeing that your clients are, what sort of size are your traditional type of clients then for these products?
Yeah, well, so the market has shifted. Obviously, I mean, with the price of Bitcoin going down in the last couple of years and then, bouncing back, the market has shifted from like retail customer who was just mining in his or her basement to actually more institutional clients. And now we mostly work with institutional clients who would start from 1 to 2 megawatts to start with to build the farm. So usually it's either some family offices or some type of accredited investors who want to diversify using cryptocurrency mining. But a couple of years ago, it were only retail people who just wanted to have a passive income. Right now, the passive income really is not possible if you don't have a cheap power or very low power, which requires a lot of research and investment at the end of the day. So now it's more institutional, and I believe it's going to be like even more institutionalized in the nearest future. So I believe it's going to be bigger funds, and there will be more like financial products built on this, because now it's still buying equipment, buying mobile data center, and putting somewhere with a cheap power. And that's a hard process, like average lead time. Let's say we have halving again in 4 years. So, if we're going to close 2 clients, lead time going to 6 months, it's not going to be so much time for us actually to fill out the pipeline. So that means that more companies have to be focused on building some financial products. Right now there are some type of, hash rate products. They sell hash rate. I believe it's a good product to start with, when you can actually redirect hash rate and just sell it, or just share it with some other customers, because it makes things easier. The client comes and say, okay, I have $100,000, $1 million, and I want to mine for half a year or 3 months. Here you go. I want to get started tomorrow, right? That's the easiest part. So I believe that has more potential to grow. It's a huge market.
Yeah, definitely. And you actually touched on a really interesting topic, which is this hash rate futures. And then there are other types of financial products that weren't previously available in terms of just traditional options and futures on Bitcoin. And I'm wondering, from your perspective, is this something that you guys are actively doing today? Because with with client sizes of maybe 1 to 2 megawatts, that seems like it might be a little bit small to be able to move and start placing bets for hedging on options and
Yeah.
futures. Or is that something that you are looking at and evaluating for later on down the road?
Look, honestly, we are not big clients of hash rate selling companies yet, because of those reasons that are smaller. We are not huge mining company, first of all. We are focused a lot on infrastructure, and we do have some own mining. But, we're not the guys who are going to tell you we have 100 megawatts or 150 megawatts. Like, there are a bunch of people like that. But even with the small volumes, there are a bunch of different services, specifically in lending area, where you can hedge against the price of Bitcoin going down. So, meaning the hash rate swaps are still, in my opinion, too early. But in terms of actually hedging against the prices and not liquidating your Bitcoin with the help of lending products, I think it's actually, the market is there. Like, we work, for example, with a local company in Chicago, Drawbridge Lending. They are
Oh
awesome.
yeah.
They're doing a great job. And they have played with different models, how they can help you with that. So basically, with the help of guys like that, you don't really need to worry about hash rate. If you buy miners for your own needs, you can actually hedge with them. But for the future, in order to sell it to larger audiences, that's probably the only way is the contracts on hash rate. And look, there is no such a huge demand yet, because uh, that has to be used only by institutions who own Bitcoin. So they own
Mhm.
Bitcoin and they buy a hash rate contract to hedge against that. Then they buy options and futures. So it's a bunch of different products in one basket. Like, if you take a look at different other commodity, like you buy oil, for example, there are so many different ways to hedge against that or for that, right? So I think in Bitcoin, the volumes are not there yet. Like, once I was at the event where there was a Tom Sosnoff. He's a well-known guy in Chicago who built the Tasty Trade. That's an options trading firm as well as educational firm. And that was like 2 years ago, 3 years ago, and a lot of people were hyped about the Bitcoin at that time. And someone asked him a question out of the audience: do you invest Bitcoin? Do you trade Bitcoin? And he was like, there's no liquidity for us. And I was like, okay, there's $30 billion of trading a day. There's no liquidity for these guys. What the hell is going on, right?
Yeah.
So, we're not there yet. I believe in options market, there is no liquidity for the big guys yet at all.
Yeah. So where do you see the industry moving these next 4 years? Because obviously we just had the previous halving. You brought up that roughly every 4 years, there's another halving that's going to occur, which changes the supply demand economics of cryptocurrency mining for Bitcoin. So with all that said, where do you think Bitcoin is going to be by the time we reach that next halving? And what do you think is going to happen within the mining landscape in that time?
So you mean industry, Bitcoin in general, or Bitcoin mining?
Both.
Both?
And
Yeah.
yeah, I guess we can
I
tackle
believe
one at a time, whichever one you want to touch on first.
right. Look, Bitcoin just popped a little bit a couple of days ago, and that's because of some news that they're going to get custody, and then because some governing institution just said that Bitcoin is actually money. I think that we are lacking the governing organization in the United States that actually can tell what Bitcoin is. Because right now we have IRS that considers Bitcoin a property. We have FinCEN that considers Bitcoin virtual currency, and then we have SEC that considers everything a stock, a security, right? And then we have CFTC that considers Bitcoin a commodity. So too many people, too many minds, right? So, and then someone else says it's the money. So I believe it's neither of those, or it's a combination of all of it. And that means that we need some separate governing institution, like self-governing institution like SEC, that are going to be actually regulating cryptocurrencies, because it's a huge market. So till that's going to be a very hard journey. It's going to be, again, a roller coaster. The price is going to go up. Then we will still see these articles that someone scammed someone because of Bitcoin and they receive a ransom in Bitcoin. Because right now it's still has a little bit of that bad taste. Till we have that good taste and someone going to say, okay, we're governing this thing. This thing is a digital asset and this is how it's being governed. Till that, I don't think we're still going to be like a settled industry, which is good because there is more room for new players. And as we can see, more and more players are getting in. In terms of mining in general, that's a hard one because mining depends heavily on prices of electricity and heavily depends on the availability of the hardware. So, and you just mentioned about the second halving. So this is what's happening. We have 7 nanometer chips right now just being introduced to the market. There's a huge demand on those chips. Intel even hasn't made 7 nanometer chips yet, and they have been, one of the biggest chip makers in the world. So new Apple products that use 7 nanometer chips. Then AMD cards use 7 nanometer chips, and then ASIC miners use 7 nanometer chips. So it means that demand on those 7 nanometer chips is going to be so high in the next couple of years that there are going to be not so much of an inventory of miners in general, which will create a huge demand on miners. And the prices on them are going to be actually high. As we can see right now, the S17s or S19s, they don't go down in price, even though, they are not really profitable if you buy them right now. You buy them and you have 5-7 cents electricity. Yeah, you could make some money, but that thing costs $3,000. Like, it's not what we've seen when there was 16 nanometer chips, if I'm not mistaken, for S9s. Those things could cost $1,000 one day, and then another day it could cost like $200 because the cost to build S9 was very low. Right now, the cost to build S17 or S19 on 7 nanometer chips is very high. So we have that problem right now going on till the next halving. Second one, the electricity cost is, there's some capacity of cheap electricity, and that capacity, I think, is already filled. Like, there are not that many hydropower plants. There are not that many other sources that provide you very cheap power. Probably like in Canada and the United States, there are still some left, but it requires a lot of investment into the infrastructure to get that cheap electricity. So I believe we're also at going close to the capacity over there. So what it tells me right now that the market, cryptocurrency market, the curve actually going to flatten here. We're not going to be growing anymore like this. It's actually going to be already more like flattened because we had capacity everywhere.
For the difficulty, you think it's going to go more flat?
I believe so. I think there are going to be a couple of spikes this fall because of the deliveries of S19s and most of the deliveries in October, November. And after that, I don't believe we're going to have huge spikes anymore, because huge spikes can happen only with availability of hardware. And what I just mentioned, I don't think they're going to be huge availability. And look, another risk, we have all this situations with suppliers from China who cannot ship miners over here for what they could before because of the tariffs. So we have another risk over here. And I mean, believe it or not, I'm sure that United States is going to be the place for crypto mining, because I'm more than 75% sure that self-governing institution that's going to govern the cryptocurrency going to be created here first, because the United States has been always the center of financial markets, and I don't think that those players out there who are in financial markets are going to miss this opportunity. I think they're going to regulate it as soon as they could, And the reason we don't have it yet, because it's still a small market. And when the lobbyists going to get into the game, I'm sure we're going to have something going. So this 4 years is going to be very interesting. And I think after the next halving, what we're going to see would be the same as we can see with gold right now. The margins are very thin. There are not many players in the gold market. And the gold is almost, like, supply of gold is almost finished. So that's why it's just, it's very flat. I mean, it's not flattering right now. The gold went up, but it's because not of the demand reasons, because there are demand reasons for that, but because of the market. But in general, gold was, very on the same level for quite some time, plus or minus a couple percent. But Bitcoin is just going crazy. You can go like 40% one day. We went 40% one day. So I doubt that there are going to be huge developments, because the infrastructure cost to get into cryptocurrency mining right now is insane. It's in millions of dollars, and not that many people want to risk it. And those who actually can risk that money are already not the newbies. They actually know how to measure their risks.
Yeah, well, that's interesting. You touched on a lot of things there. Going back to the regulation side, which everything ties back into. The piece of news I think you were referring to, which huge piece of news, is that the person who was appointed the head of the OCC within America, he was previously at Coinbase. So many people are looking at this piece of news and seeing, wow, we have a Bitcoiner as heading the OCC, which is almost giving, in a sense, the green light to all of these financial institutions to really dive in, and really just adds that extra level of legitimacy to the space. So with that, there are a lot of things that could play out, as you mentioned, within mining, and you compared it to the gold industry and how gold has continued to progress and how the margins have become more thin. So with that said, moving into the future with crypto, you mentioned that there are only a handful of players in gold mining today, and there are thinner margins. Do you think that the same thing is going to happen within crypto? Or if it's not, if you think it's going to be different, how do you think that it's going to look and progress to that?
I think there will be not that many players. That's my opinion for now, at least. Because, again, of infrastructure cost, because some people are much longer in this business than others. And as I said, the reason I was so happy to start this business was because I was actually at the beginning. And now it's not the beginning anymore. It's already like, couple yards forward. So
still chapter 2, like very early.
I agree. It's still early, but the entry point is already the scale that you have to entry is high. It's not something that you can start with a couple miners at home, because literally right now you cannot. Before you could, but right now at 10, 12 cents at home, you cannot start this, even if you have S19, because that wouldn't make sense. So I believe they're going to be, like, from infrastructure perspective, there will be more big players. But in terms of actually adoption of the industry, they're going to be not more big players. There are going to be a handful of players, big players, who will have infrastructure ready. But there are going to be more people who would want to have a piece of it. So we'll have either like some mutual funds or ETF. I don't want to speculate on ETF, but there are going to be some other type of products where anyone else out from the street would be able to participate in mining. Like you would just have, that passive income, but not investing in the equipment. So you would just put some money on there on the website, and it will give you some returns depending on the market. So infrastructure-wise, people will be, building bigger guys will become bigger. Smaller guys will not get there, but there will be more mining exposure to the general public, I'm sure.
Very interesting. And so you touched on another interesting aspect there in regards to the understanding of the technology and how it particularly is applied to, in this case, what we've been talking a lot about, Bitcoin. But let's say that you're talking with someone who's outside the industry, doesn't necessarily have a deep understanding of Bitcoin or blockchain, if they come to you and they say Bitcoin is a scam and you have to convince them on the spot that it isn't a scam, what are you telling them?
I'm telling that Bitcoin has been around for 10 years. The trading volume in Bitcoin is around $30 to $50 billion a day. There are Bitcoin futures which are traded on CME Group, which is one of the most prestigious trading platforms out there in the United States. Then that IRS has added a question: do you own Bitcoin or do you own cryptocurrency? And you have to report that. And I would tell them that also, it's worth looking into this. Probably that's what I would tell them. Yeah, because of those reasons.
Well, hopefully they'd listen to you.
Yeah,
I think it would be a good decision on their part.
Yeah.
Interesting. So I know we just addressed if there's someone who doesn't believe in Bitcoin, what are you telling them? But there are many people who understand Bitcoin, understand blockchain, but aren't necessarily in the weeds of the mining industry like we are. What would you say is the most common myth among that group of people that understands blockchain, understands Bitcoin, but they're not within the mining industry? What is the biggest myth that they traditionally have about mining that you see today? And if you were speaking to someone, how would you debunk that myth right in front of them?
Oh, that's a tough one again, Will. I think there are a couple. First one, I probably touched a little bit, that it's money of the thin air. That's number one. The miners are printing money and just driving Lambos. That's number one. And that's for sure. And then another myth is that Bitcoin is using more power than Ireland, and it's bringing CO2 into the air, and it's a huge disaster for the environment. It's the last nail into the coffin of our climate change problem. That's what I've heard multiple times. I think those two things are myths. So the first one, that Bitcoin is not a thin air, that because you have to invest a lot of money to get one, and to get one efficiently, that requires a lot of infrastructure cost, like data centers, equipment, electricity cost, contracts, much of those risks that you bear with that as well. So sometimes when you actually do the math, you're like, maybe I just better buy Bitcoin or buy something else, right? So that's one of the myths, probably, that I believe I would talk about. The second one about CO2 is that Bitcoin is not using power. Bitcoin wouldn't be using power if it was not available. So that power is being generated anyway. That power is available out there, and most of the general public doesn't realize that power plant is on 24/7, but electricity is not used 24/7. It's used most from 4 to 7 p.m. when people come back from work and actually turn on TV or do whatever, some homework there, right? So they don't realize this. So Bitcoin actually here is helps the environment because it actually balances the grid. So it helps power plants keep them running more efficiently, which means they have more money to invest into other type of technologies and other efficient technologies to make that power. So Bitcoin is a huge helper per se for this industry. And I can talk a lot about that because power generation in general is a very interesting thing, and it doesn't consist of like one type of power like coal or gas or something like that. It has multiple aspects of it. There are multiple intermediaries in the process to transport power from generation source to actually the user. And Bitcoin sometimes, well, in most cases, actually helps to reduce the fees. For example, our company built the first location for our own needs in Indiana, and that was a small co-op that we worked with, and we used 5% of their power. So because of what we use 5% of their power that they generate, the prices for general public, for people who have just small homes over there, the prices on the electricity would not go up because this company, this co-op, could buy more power is like in a wholesale manner, which would bring the price down and wouldn't bring the prices up. So that was actually a good thing, even though, for example, it can play around in Washington state when it was actually vice versa, that Bitcoiners were using too much power there, so they raised the price. So they actually they raised the price as a regulation technique. That was what it was. But in general, if it balanced well, it's totally great thing. And specifically, for example, what we do as well, besides selling mobile data centers and building infrastructure, we are using Bitcoin mining equipment and mobile data center actually to use wasted energy, like wasted gas and flared gas and so on.
Yeah. And I'm really happy that you touched on this, because that is definitely a big misconception outside the industry. And just to get at the heart of what you said at the end of that answer, you are actually going in and helping out that co-op because they weren't utilizing their assets in the most efficient way possible. They had excess power. You guys went in, took up that excess power, paying them additional money. And now that co-op has a better financial picture where they can pass some of that savings along to the people in that surrounding area, as well as you bringing and investing capital within that local area as well.
Oh,
So,
I don't even touch that. That's a huge aspect. That's so much addition to the economy in terms of spending for infrastructure costs, buying transformers, investing cables, electrical contractors, local people. It's totally different topic, of course.
Yeah, and that's really great. I'd like to thank BlockFi for sponsoring today's episode. BlockFi provides wealth management products for crypto investors. I personally hold my crypto with BlockFi because they pay me up to 6.2% interest annually on all of my crypto holdings. At Sazmining, we've hooked up all of our listeners with a special sign-up bonus. All you have to do is go to blockfi.com/Sazmining and sign up. Again, visit blockfi.com/Sazmining for an exclusive bonus offer. It's a no-brainer to earn additional interest with BlockFi. Today's episode is also made possible by Cogent Law Group. Finding reliable legal representation in blockchain is one of the biggest challenges when building a business. You need to make sure that you work with a law firm that understands the legal frameworks that apply to the industry and has the ability to strategically help you grow your business. When researching law firms for Sazmining, I found that Cogent Law Group checked all of the boxes. Not only do their lawyers have expert level experience, but they also understand the blockchain industry. Cogent Law Group gives you access to high-end lawyers without breaking the bank. So I think that we've touched on everything on the Bitcoin and mining. So the last couple of questions are just not crypto related, but I think would be interesting for everyone listening. First being, what is your favorite book?
Oh, I think I should have prepared for that. Yeah. So there are multiple books, but one book that I actually read and liked a lot, that helped me actually just get into this business or to evaluate that I have to get into this business, was the book called The Quants. That's a book, I think it's written by one of the journalists from Wall Street, and it was about actually the financial crisis in 2008, how a few hedge funds actually crashed the whole system, building algorithms and trading, and how they were packaging different financial products. It was a great book, and actually talked a lot about the thinking of people who are behind those crazy trading strategies.
Yeah, that sounds very interesting. What was the craziest thing that you learned when reading that book?
Well, the craziest thing, the craziest, well, it's not the craziest. There are multiple things over there. But for example, one of the things that I learned there, that one of the largest hedge fund is being run by like 100 people, but all of them have PhDs. So, and they have like billions and billions of dollars under management, something like that. And then the craziest thing that, from my opinion, that I got from this book, hedge fund managers are looking into money a little bit differently than people from startup industries. Tech industries. Those people who are entrepreneurial usually think they want to build something valuable and sell it and provide a service. And these guys, they just think about numbers. For them, of course, they do service for customers as well, managing money, but they have numbers, and numbers is the most important part. So their attitude to money is totally different, and attitude to value is totally different. So it's not actually about the value; it's about those margins they can make on the trades.
Yeah.
Again, that's my opinion from the book. It could be different. Another thing I learned, I think that's worth to say, that one of the guys who set up a very big hedge fund, I think he was a professor from MIT, and he went to Vegas and he played blackjack there. So he was winning blackjack all the time. Actually, his character was depicted in the movie 21.
Great movie.
Yeah, so that character, that's a real guy, and he was depicted in 21 movie. So he was playing in casino, and it was not fun for him because he already calculated all the numbers. So what he said, I'm going to go and set up a hedge fund and actually play in the biggest casino of the world. So the great thing is that trading and all these assets is actually looks like a casino a lot.
Yeah, very interesting. Well, the last question is, where can everyone who's listening right now connect with you online?
I just started to post some things on Twitter. So it's Sergii Gera, and LinkedIn, Sergii Gerasymovych. You can find me there. I think if you Google Easy Blockchain, my name pops up there. And follow the company as well at Easy Blockchain on Twitter as well as on LinkedIn.
Perfect. Well, thanks again for coming on.
Thank you very much for having me.
Yep.
It's been a pleasure.
Thank you for listening to this episode of the Sazmining podcast. Be sure to follow us on social media and YouTube for the latest updates and previews of upcoming episodes. Full episodes and transcripts can be found on sazmining.com every Thursday. If you want to hear us interview a particular guest on a future episode, please reach out to us at podcast@sazmining.com.